You out there grinding? Are you a hard worker? Well, guess what? There's a new tax deduction for you. It is the deduction for overtime pay that came with the One Big Beautiful Bill this year. Hi, everyone. I'm Dave Lewis. I'm a certified public accountant and owner of High Impact CPA, and we are continuing our One Big Beautiful Bill series today, talking about the new deduction for overtime pay. So we'll talk about what it is, what it isn't, how you as a taxpayer can take advantage of it, and also what it means for you business owners. So let's jump right in. Deduction for overtime pay. So, July 4th of this year, the One Big Beautiful Bill got signed into law, and with it comes a whole bunch of provisions. Now, the overtime pay deduction is very similar to the no tax on tips deduction. So, we've got a video on that. Check that out. That's the last one that we did. If you'd like to learn a little bit more about that. Meantime, so the deduction for overtime pay. For 2025 through 2028, this is a temporary deduction. You can, if you are an FLSA qualified employee, so basically a non-exempt worker and working at 1.5 times pay, so your overtime pay, right? You get a tax deduction of up to $12,500 per year. And if you're married filing jointly, that amount doubles to $25,000. So again, to qualify for this, you have to be an employee that's listed under FLSA rules as a non-exempt worker. And we'll go into that toward the end of the video because there's some tricky things that people are going to try to do that that are going to be barred by this bill. So things that promoters will tell you that you can do, some dumb strategies that you're not going to be able to get away with. We'll go over that. Anyway, so $12,500 a year. Single head of household, $25,000, married filing jointly. Married filing separately has its own rules as usual. We won't go over that here. I'm probably going to make a whole other video on married filing separately rules for a bunch of these different deductions. So, this deduction does have an income phase out, much like the tips deduction does. So, if you are single, head of household, and you're making more than $150,000 a year, this deduction is going to start to go away for you. So for every $100,000 you have in modified adjusted gross income, you lose $100 of this deduction. So if you're making a lot of money, this deduction may go away. So again, once you hit $275,000 of income, it's completely gone. And if you're married filing jointly, that amount is $425,000. It's gone. Everything in between that $150,000 to $275,000 or $300,000 to $425,000, if you're married filing jointly, you're going to have a phased down deduction as you go. So just be aware of that. If you're in a position where you're an hourly rate and you're a high hourly rate and you are making a lot of money, or you have a lot of other sources of income between you and your spouse, you may phase out of this deduction. As far as employers go, nothing really changes this year. It's like any other wage you're going to pay. It's still got to be reported on the W-2 for your employees. For 2025, we were hoping there was going to be a new W-2 form that was going to come out that would help kind of define what all the different wages were. So if we're getting regular pay, if we're getting cash tips, if we're getting overtime, and if it's a qualified profession in the case of the tips, we're not going to get a new W-2 form for 2025. So one, it's going to be fun for us tax professionals that have to deal with that and go, okay, well, if everything's lumped in box one of W-2, which of it is overtime? So we're going to have to go back to payroll records, and you as a taxpayer are going to need to, keep your final pay stubs and make sure that you're actually delineating between regular pay and overtime pay in order to take advantage of this deduction. Now, there is a new W-2 form slated to come out in 2026 that is going to break all of that information out. But for 2025, this bill got passed halfway through the year. We're just going to have to deal with it and move forward. So pretty simple deduction, not a lot of meat to it, but there's going to be some things that people do to try and skirt it. The biggest one that I'm hearing about is, hey, I'm an S corp owner, right? As an S corp owner, I have to pay myself a reasonable salary. Hey, I'll just put myself on an hourly wage, and then after 40 hours a week, man, I'll just pay overtime, right? Well, no, they thought of it, like the no tax on tips deduction. Uh, you're not going to be able to get away with that. It specifically excludes FLSA specifically excludes S corp shareholders. Um, there are very limited instances. So, say you have a spouse working in the business, they're an employee of the business, and they have very little control over their own compensation. Maybe. Same thing with your hiring your kids in the business. Maybe. But it's going to be under very specific circumstances. And as always, substance over form wins with the IRS. So if you do get audited, they're going to look at exactly, okay, what does the spouse do? What do the kids do? Does this make sense for the purpose of the business? And is there really a lack of control over compensation? So just be aware that the IRS does think of these things, and lawmakers think of these things when they draft the bill. And so if you're trying to be cheeky with everything, it's probably not going to work when it comes under scrutiny. So just be careful there. Oh, the one thing I should have said at the top of the hour, I should put this in the description down below, but the overtime pay is still subject to Social Security and Medicare taxes. This deduction is going to be on the taxpayers' tax forms. So nothing employers have to worry about there. Anyway, this one's been a bit of a rambler. Again, not a huge amount of detail to this one. It's not super complicated, but just be aware that it's out there. If you're out there and you're an hourly worker and you're making overtime, be aware that this deduction is available to you and understand what the phase outs are and whether or not they apply to you. If you need some help with your taxes, if you need a good tax professional, please reach out to us at High Impact CPA. I will leave our contact information down in the description below. And as always, if you like the content, like and subscribe. I am not a great videographer. We're getting better at it, though. We're trying. In a couple months, we are going to have a brand new studio. The video quality is going to be a lot better. So stick around. I'm learning as I go. I'm not a YouTuber, but we're going to make it work. So thanks, everyone. Take care.